Wall Street lost confidence in the Fed. Fox Business senior correspondent Charlie Gasparino working the phones all day. He's joined by Jim Frischling, our buddy at NewOak Capital, who's joining us as well. Charlie.
You can ask Jim this as well, and he would tell you what I'm going to tell you. Yes, a resounding yes. This is not. Yesterday was not the Fed's finest hour. As a matter of fact, I can't remember in a long time from really seasoned market professionals that I've heard such criticism about of the indecision, a lack of any sort of transparency. I mean, let's be clear here. For months and months and months, and maybe years, we've been hearing that the economy is growing. It's getting better. It's off its tremendous lows from when following the financial crisis, which, you know, most normal thinking people would say that necessitated a zero interest rate policy on the Fed funds rate. It also necessitated quantitative easing, which is buying of bonds by the Fed, which has the effect of driving down long-term rates. That was necessary. We don't have QE anymore, so we're not doing the stuff on the long end, although the Fed has still holding those bonds. It's not selling them, which means that, you know, prices of those long bonds, interest rates on the long end are still fairly depressed. And now we have something on the short end that we need to deal with, and they're just not dealing with it. I mean, here's the bizarre thing. You would think the market would rally 293 points, not be down 293 points on such a dovish move, but it's down 293 points. And probably what you hear from investors, what they're thinking, most of them, the ones I talk to, I've taken an unofficial survey. I guess it could have a huge margin error because I haven't spoken to the world, but what they're telling me is a lot of investors are worried about a liquidity trap. Are we in the position right now where interest rates are so low that the only thing you could do is raise them? Because if you don't raise them, then, you know, banks won't lend. But if you keep them at this level, nothing's going to happen anyway. So this is a scary situation right now, brought on by the fact that the Fed waited way too long to raise rates.
Well, Jim Frischling, you're part of the smart money there on Wall Street. What do you think? And let's just remember that it was Goldman, I guess, about 24 hours beforehand that was saying don't raise rates. I mean, these guys love the free money.
No, they do enjoy the free money and continue to build their balance sheet. You know, I try not to be a Fed basher because I sincerely believe that the onset of the financial crisis, they saved the global economy. But in the category of what have you done for us lately, to Charlie's point and to others, they missed a great opportunity. This economy, and I'd like someone to tell me why this improving and strengthening U.S. economy couldn't withstand a quarter-point hike just to put it away and get moving. And instead, we got mixed messages. They had kind of a no-confidence vote in the global economy, that being the Fed. And as a result, I see a lot of money guys today having a no-confidence vote in the Fed. And to Charlie's point of us basically saying a zero interest rate policy is all we can do. And the definition of insanity, I like to say, is doing the same thing again and again. The zero rate policy is not improving certain areas that they are relying on. And in my opinion, there is enough robustness in this market that the rate should have happened. They missed this one.
Charlie?
Yeah.
I want to ask Charlie something. You know, these guys have had a very cozy place to park their money at a decent return at the Fed. The Fed does allow that, doesn't it? At what point does the Fed use that as a tool to say, you guys are out, I'm playing landlord, we're kicking you out, you've got to start lending your money and doing your own thing?
Well, I think the problem is the Fed has a quadruple mandate these days. It's not just, you know, keeping inflation low and trying to promote employment. It's also a regulation. It's also a regulator. So that's a trifecta. Sure. That's three, not quadruple. That's four. But that other mandate as a regulator, you know, they hasten to tell banks that they should deplete their capital to lend out. I mean, that is a real conflict of interest here that it's very hard to get your hands around. I will say this, Liz, just more, I guess, based on what happened yesterday. And I don't think we can, underplay this enough or overplay this enough. The Fed lost tremendous credibility because everything it says in the past seems to be wrong. I mean, they've came out with statements after statements, their minutes, with Janet Yellen again and again and again.
This year.
And by the way, not just this year, the things are okay. And now they're telling us that a country like China, which, represents a very small portion of our GDP, is somehow, because they have some issues, we can't raise rates a quarter of a point and readjust the risk-taking that goes on in markets when you keep interest rates this low. It's a bizarre world we live in, and I think they've irreparably hurt themselves. Well, not irreparably, but I think for a while, I don't think you want to be in the Fed's position of people questioning you now whether you know what's going on.
Yeah, and by the way, and I'd just like to make this point, a lot of traders here did not like when Janet Yellen said yesterday, we don't know what the recipe should look like for a healthy atmosphere to raise rates. When she said that, one trader walked past me and said, you don't know? If you guys don't know, then who does know?
Liz, I need to ask you, because you're on the floor. I mean, are those guys talking about an October rate increase? It sounds crazy, but...
No, you know, when the Fed funds futures rate play that out, and we got to run right now, but the Fed funds futures rates indicate only a 14% chance for an October rate hike. But if she pushes it till December, who knows what that could do? And right now, by the way, I'm glad you used the word quadruple a couple of times, Charlie. Jim, thank you.